Good morning, everyone. Thanks for coming. This is my weekly performance summary for the week ending 9/13/2025. Now, you guys know that normally I post this on Saturdays for you. It would have been Saturday the 13th. Today is Monday, so I'm sorry it's running late. This is um, something unanticipated. The Like most brokerage houses are run by like children. The one that I work with, that I have my accounts at, that I use for this demonstration of the net winning trader protocols, the particular brokerage house that I use uh, decided to do internal server and maintenance and upgrading and all that happy little horseshit, and didn't tell anyone. So all day Saturday and all day Sunday, I did not have access to my accounts to be able to download the data that I use to create my notes for you. So I basically woke up on Saturday morning ready to get everything out to you like I normally would, and I was unable to access my data. So sorry about that. Won't happen again, near as I can tell. So, uh, like I said, I wish it would have been different, but it is what it is, and it's just infuriating to have to deal with people whose idea of business sense. If you're listening and you run a business, you know it's okay to tell your customers what you're planning to do if it will affect the customer. Anyway, so that's my venting for the day, and let's get to work. Sorry about that. All right. Well, anyway, this week, not a whole lot going on, as a matter of fact. Only had a total of 8 trades, which actually is in the range of average. I typically get 10 to 12 closed trades. Um, So 8 trades is a little below average. Not a lot going on if you're kind of watching what's happening here the last week or so. The foreign currency markets have been more sideways than anything. And when we look at charts, I'll show you what I mean there. But from a standpoint of opportunity, then therefore, when the markets aren't really going anywhere, your opportunity base is a little lower. So in my case, working with the net winning trader protocols, this is what we got: 8 trades. We had 5 losers, which is a little on the high side. 3 losing trades from the long side, 2 losing trades from the short side. Total pips lost 187.5. But we had 3 winning trades from total: 2 from the long, 1 from the short side. 204.2 pips. So from a standpoint of winning trade to losing trade ratios, right on track. You want to pull out $2 to $3 for every dollar you give back. So on average, so if you have your numbers here, you're looking at dollars made to dollars lost. You'd want to have 3 winning trades. You'd want that to be around 70 to 80 points each, which we're right about there. And then on our losing trades, we'd want those to be 40 points or less if we can get it. So 5 times 40 would be 200, so slightly less. So basically, the winning trade to losing trade ratio is there. What we needed would be another win or two with one less loss. Would have been perfect. But that didn't happen this week. So basically, we had a scratch week. And scratch week, guys, I'll take a scratch week anytime. 16 points. So what we made on our pips here was enough for beers and cheeseburgers Friday night. If we take a look at what we're holding for the weekend, now this would be, of course, coming into today, and you're actually seeing this working now into Monday morning, which normally you wouldn't get a chance to see that because you'd see it Saturday and you have to wait till today. But in any case, holding short pounds, which has at this point small open trade loss after holding an open trade gain. So this data that I'm showing you is from Friday. Euro, nothing working. Yen, we have a long position at 47.17. and we have a short position from 47.75. So that's roughly 60 points permanently locked. So if the market rallies away, great. If it sells off, fine. Well, all we want is a bigger move than nothing. CAD looking at the short side, so holding a total of open trades at Friday's close, 80 points. So we look at the close trades plus what we had open trades. It, not a bad start for a week, about 100 points. But, we're giving some back this morning, just a little bit, and holding everything else. So let's go ahead and have a look through what we closed out, starting with pounds. Okay, from last week, you can see this right here. Where'd it go? There it is. Little green line right there. That's from last week's long. And this is the short position that was held against it from last week's high prints. This is our exit of our short right here. See, this was the short position from last week. So here is the exit right here from the short position for a loss, still holding the long, and then the long position, the stop was rolled up to lock in a little bit bigger gain, which right there, just a little bit of I call this a bad beat. I would have been holding this forever if I could have. Look at the trend starting to develop here. We're up against the high end, and we went through it, coming back into it now on Monday morning. It's building some nice potential upside momentum here. So if we get a little bit further through here, we might buy the next buy signal. But what we wanted to hold what we had. I mean, I call it a bad beat. It's when I get stopped out by 1 point, or 2 points. It's just irritating. So anyway, on the way down, these high prints here, you can see these high prints with the H reversal, got short after getting stopped out. Made no sense at all, but that's following the signals. So here's the short here, out at break even here. So this short right here, nothing happened. This long right here was adding to the open long under here. So this long right here was adding to the long position down here. Meaning went long, stopped out of the short added again, came down to a buy point. You can see it right here, right? Little buy signal there, and another one there. Of course, that's a perfect combination for my methodology. Put a long on, the net position is now working, stopped out by 1 point. Followed by, stopped out of the short flat. And then here's our current short right here. So pounds, we had the rhythm right. We just didn't get positioned properly. Even though we're using the protocols and doing everything exactly according to plan, the market just handed me a bad beat last week. So it is what it is. A little frustrating if you ask me. Euro. Here's our long from last week, right there. And here's what we got out at, right here from our short from last week. Re-entered, or actually what I did is I added to it up here as we broke out from the upside, middle of the week, and came down to test the breakout. And we got a buy signal at the same moment. You can see a little buy signal right here. I'm thinking this might be the upside break. So I added to it, stopped out right here, pulled money out of the market net, but not my best move. Right here, re-entry of the buy side on another long signal, and stopped out by 1 point. Another bad beat. Here's yen. And I think it's important for us to note something about dollar yen right here. This is all of last week's performance. methodology, I want you to notice why it's important that you consider all possibilities when you're working with a systemized approach. So remember, a systemized approach, even something as well thought out as the Net Winning Trader Pro Traders Toolbox, even something that is of a high quality like that, it's not going to be able to find all the potential that is available to you, and it's not going to be infallible. It's going to make errors or mistakes, and it's going to leave money on the table because that's the nature of this business. You can't put something out there and expect it to be 100% accurate all the time, especially something that is a reversal trend following. When the market's in a range, you don't need a systemized approach. What you need is discipline. Last week, at the start of trading in Tokyo, the market traded right to the top of the existing range. Now, this happened, let's see, there's the open, 1, 2, 3 hours into trade. So this would be 9 o'clock at night, New York time. So 9 o'clock at night on a Sunday, I'm in bed because I'm taking what I do very seriously. However, the market gave me an opportunity that if I was managing my discipline as well as I could have, I should have still been in this trade. In other words, this is a range. You don't need a system to make money in a range. It's very simple. You place your limit order to sell at the top of the range and your limit order to buy at the bottom of the range. That's all you do. And then, of course, you put your stop out of range. So if I had been fully disciplined, instead of listening to my wife who wanted to go shopping, breaking my discipline, I would have had, at the open, I would have placed a limit order to sell. Roughly, my order would have been right about, I don't know if you can see that right there, but it would have been right there, just about 2 or 3 pips higher than my actual bar. That's how I play it. What I normally do is I say, wherever my number is for my range, I'd like to be right in here. So that number here plus a handful of pips would have put my entry order right about there to sell limit. And then, of course, I would have had a working buy order on the other side down here to cover. But this, of course, happened Tuesday. And of course, what should have been right there at the buy side, too. Should have had a buy order working with a stop out of range. Meaning, what? Should have got both sides of this. If I'd have been following my discipline, which, we all know, if you're following any of the protocols that I put out there, you'll know that my single biggest thing is discipline. You've got to remain disciplined. You can't let anything break your discipline. Even the littlest break in discipline will take money away from you. And there's one example. Getting short at the high of the range, being able to cover it at the bottom of the range, reverse, and go long for at least something during the week. That was, in my opinion, that was God himself saying, here you go. Need to make your car payment? Here you go. Thanks for playing. But it didn't play that way. So anyway, I took the sell signal here, which came during the middle of the range because of this down move, covered the entire range. It's been range trading for several weeks, and now this is a trading error. As I drew a trend line like this, basically, at that point, and I said, you know what? Yet the 50 bar is riding right along the rail of that trend. Hundreds rolled over and moving south. We're right down the middle of the range, right? That was the caution flag. Right down the middle of the range. If the range isn't over, there's no point in going short here. If the range is over, that's the perfect place to go short because it's on developing trend. So what are you doing at that point? You're making an assumption. And you don't know that. So you're making an observation. Going with the probabilities, the thing to do here was nothing. But in this case, I assumed that the trend was developing. So I put a short on here, and as you can see, stopped out here for a loss. To make matters worse, here's the buy point. Over here is inside the range. However, it's a reversal pattern. Does that mean this is the new uptrend developing? Okay, well, we don't know that. But we're holding along from a reversal pattern, which is permissible. Same thing with the short, holding a short from a reversal pattern. So now here's our stop out of range for the trade to the upside, stop out of range for the trade to the downside, and here's the market sitting right in the middle. And look at where the signals are coming on, both buy side and sell side signals are coming on right down the middle of the range. This is called coiling. It's going to happen. It's going to make a big move one way or the other. Good news is I got both sides on. So one side will work, the other won't. That should be more than enough made on the winning side. Cover the cost of the losses. Net, we're way ahead. That's the strategy. Usually works. So we'll see if this happens. This, of course, yen. The only thing that has me a little worried is that both stops are within existing previous price action. And of course, last but not least, Canada. And Canada, inside the range, X reversals. But as you can see, no joy in Mudville yet. We're still holding our short. We're right down the middle again. Now look at this. Here's open and close Friday, right? Open and close, I should say, close Friday, open Sunday night. We're right in this range area right here. Try to draw it as straight as I can. That's basically it. Slightly higher open this week, but it's really a tight range. It's, I think, less than 100 points wide, I think, right now. So being able to get positioned and make money when you've got less than 100-point range, next to impossible, in my opinion. But very, very good places to get positioned to wait for the move that will make the money. So if that occurs, we should be just golden on this trade. Of course, the idea there at this point is we need the short side to work. So there's our reversal patterns, existing short position, looking for a move under last week's low. That would be under all of the moving averages and heading to no man's land down here by the bottom of the range. I'd be very happy at that point to roll stops to break even and let it work to see if we have a downside break to the range. And that's it for charts and the joy of participating last week. So thanks for listening. I'll be posting my performance again next Saturday and every Saturday, God willing, and the creek don't rise. The problem that I had this week, which was had no idea that the platform I used would be completely closed and I would be unable to get to my data. Had no idea that was going to happen, so I had nothing I could do but wait, guys. So sorry about that. But it'll be there next Saturday, like I said, Lord willing, and the creek don't rise. If you're looking for better tools and you want to make better use of those better tools, I want you to consider me your friend in the business. I've got a huge amount of content that I can offer you at netwinningtrader.com. And I think you might be better served by having a look around there sooner rather than later. Also, you're welcome to attend my Market Mastery Meetup, which is my online social community of like-minded traders looking to push the limits of their performance and get their best year ever. That's what we're there for. So we'd love to have you join us, and let's hear what you're doing and how you're doing it. And maybe we can add some discipline and some bottom line to what you're doing, and maybe you can add some things to what we're doing. That's the whole point. It does cost money for the Market Mastery Meetup and for netwinningtrader.com, but I'm going to help you with that if you buy the entire lifetime membership at netwinningtrader.com. Just take the package. Just say that I'll take it. What you're going to get is my online library, and like every library, it's open all the time, and I'm constantly adding material to it. It's a never-ending, always growing set of tools for you. If you do that, I'm going to give you an entire year of Market Mastery Meetup for free. I'll just include it in that. Normally it's $48 a month, but you'll get it for free for an entire year. So using the protocols that I can teach you, using the material that's in Net Winning Trader in the online library, using that material and being taught how to use it, an entire year of support and discipline, education, and training, I'm going to have a hard time believing that you're going to end up behind the eight ball even further. In fact, I would hazard a guess that it could be the best investment you ever make in reaching your goals. The total amount you'd have to come out of pocket, I bet you lost more than that last month. So if you're still losing and not getting where you want to go, just sit down and make a comparison. There's a good chance that what you'll learn right out of the box will be more than enough for this to pay for itself in the first few weeks or months, and it may exactly be what you need to reach your full potential. That being said, I'll see you next week, or join me for the Daily Traders Discipline, which will be up shortly for today as well on Monday. And that, of course, is always free. You can get that through my Substack account or through Apple Podcasts, Spotify, or YouTube. So I will see you next time. Thanks again. And don't forget to run your stops. See you next week.